A lot of people blindly believe that if you want to live a financially free retirement, all you need to do is put aside $1 million. Well, that's not exactly true. I'll show you. Let's talk about the progression of money. If you had $1 million back in the year 2000, you could buy almost twice as much stuff as you having $1 million today in 2023. Today in 2023, to buy the same amount of stuff that $1 million could back in 2000, you would have to have about $1.78 million to buy the same stuff that $1 million could back in 2023. Now, I want you to think about this projecting forward. This was just 23 years ago. So now, if you are 42 years old today, and I know a lot of you watching this are younger than 42 years old, but just stick with me for a minute. If you're 42 years old today and you want to retire at 65, that's 23 years from now. So the question is, what's going to happen in 23 years when it comes time for you to retire and you have $1 million sitting in your retirement account? So now, let's fast forward to 2046. 23 years from now. So now you're working hard to build this nest egg of $1 million that way by the time you retire in 2046 at the age of 65, you will have $1 million put away. You will be a millionaire. But the question is, what will that $1 million be able to buy you then? And in order to predict what will that $1 million buy you in the future, let's start by looking at how much money you need in today's time, because money today is not the same as money last year or money next year. So assuming that you need $50,000 a year to live a decent lifestyle in today's money, not next year or the year before, in today's money, $50,000, what is that going to look like in 2046? Well, remember, the inflation between 2000 and 2023 was about 78%. That means that you need 78% more money today to have the same lifestyle in the year 2000. So now, if we go forward, and I'm going to be a little bit generous, I'm going to say that the prices of things will rise by only 75% over the next 23 years. So I'm going to be generous and say that inflation is actually going to fall for the purposes of this example. And you need $50,000 a year today. Well, now we can just project forward how much that $50,000 a year today is going to cost you in 2046. So now let's do the math. You work to put aside $1 million when you retire at 65 years old in 2046. And right now you would need $50,000 a year, but applying inflation, that means you would need closer to $87,500 because now we're applying a 78 or 75% inflation factor here. In 2023, if you had $1 million and you need $50,000 a year to survive, you would be able to survive for 20 years, assuming your money is not growing. Here, you're going to be able to survive for about 11 and a half years in retirement. Now, can you live off of this $1 million in 2046 for 11 and a half years? Sure. And this is assuming your money is not growing. But what happens now if you're 30 years old and you're watching this video and you have a goal at 30 years old today in 2023 to retire with $1 million? What happens then? So if you're 30 years old today and you want to retire at the age of 65, that means you have 35 years ahead of you. So let's go back 35 years and see how the prices of things have risen since. So 35 years ago, we're talking about 1988. If you had $1 million in 1988, well, you were pretty rich. Today, if you want to buy the same amount of stuff that you could back in 1988, you would need almost $2.6 million. So over the last 35 years, we have seen the prices of things rise almost threefold. So now let's project this out to the future, assuming that prices continue to grow at the same rate that we have been seeing over the last 35 years. So now, 2023, how much money do you need to survive? You need $50,000 a year to live a decent life. Now, by the year 2058, 35 years from now, you're going to work to put aside, I'm missing a zero, you're going to work to put aside $1 million in the year 2058. Now, if you want $50,000 a year today, it's not going to buy you the same lifestyle in 2058. So now let's apply the same factor. And that means that now you are going to need $128,000 a year in order to fund the same lifestyle that you want today with $50,000 a year. So now, how long will you be able to fund your retirement with this $1 million that you work to put aside? You have 8 years worth of money now put aside to be able to fund your retirement. Can you fund your retirement with $1 million in the year 2058? Well, maybe you can reduce your lifestyle, but is that the goal that you're looking for? Now you have a few different options here. Option one, you might say is, well, can't I keep this money invested? because if I keep it invested, then maybe this money can continue growing. I'll just keep it in the stock market. However, you got to think about it in terms of risk as well, because if you're 65 years old, you don't want to take a lot of risk with that money because now you need to start accessing that money. And if you keep the money in the stock market, well, you could also potentially risk a stock market crash. And if you see a stock market crash, you could see a retirement portfolio get cut in half, which is why you see a lot of financial planners tell people as they get older to move their money out of stocks and more into cash. That way you have more protection of your money. Option number 2 is you can move this money into a high interest savings account. However, you have a couple of risks with that as well, because number 1, we have no idea what high interest savings accounts are going to be paying in the year 2058. Just a few years ago, high interest savings accounts are paying next to nothing. Today, they're paying a lot higher interest rates. So we don't know where interest rates are going to be in the year 2058. And even if we have the same interest rates today in the high interest savings accounts, well, you're not going to make enough money to cover $128,000 a year worth of expenses. I mean, we're talking about a 12 or 13% return on your money to be able to generate this, and you're not going to get that in a high interest savings account today. So will things change in the future? I don't know, but that's taking on a lot of risk, and based off of today's numbers, that's not going to be enough to fund your lifestyle either. So what does that leave us with? Option number 3. Option number 3 is maybe you want to do something a little bit different, and let's talk about that. The things that you want to consider working on are MIA, mindset, income, and then your assets, and more particularly cash flow producing assets, at least for me, because that's what I like investing in. And so let's start by talking about the M. But before we do, I do want to let you know that if you are interested in learning more about investing your money and building your financial education, my team at Briefs Media put together this amazing ebook on how to build wealth as an investor that will start by walking you through how do you save your first couple $1,000s, how do you build the mindset of an investor, and then we'll walk you through different investing strategies. I'll talk about can you start generating cash flow, and I'll talk about how you can spend your money smartly. I'll talk about how you can earn more money smartly, and I'll talk about how you can protect your assets. This ebook is completely free. If you want to read this ebook, I got the link to how you can download this ebook for free down in the description below, or you can go to briefs.co/ebook. Now, starting with your mindset, this one is very important because many times we put ourselves into a financial box where we assume that we could never achieve $1 million net worth, that we can never achieve this type of lifestyle, this type of financial freedom. And so now we are creating limitations for ourselves. And as soon as you create that limitation for yourself, you have stopped yourself from ever achieving that success. And so this is where the first step to any sort of financial success is believing that you can have a better financial future. And I don't care how old you are. I don't care how you grew up. I don't care how much money you're making. I don't care what degree you have. I don't care what financial situation that you're in. There's always a way for a better financial future, but you have to believe it's possible for you, because if you believe it's possible, what's going to happen? You're going to start watching YouTube videos on how you can improve your financial situation. Then you're going to start reading books on how you can start improving your financial situation. And as you're reading books, now you can start taking more action on how to improve your financial situation. And as you start taking action, you're going to realize, oh, I want to learn more about, let's just say, real estate investing. Now you can take a course on real estate investing. Then you can start meeting some people on real estate investing. And then you might realize, you know what, real estate investing is not for me. I'm going to start my own business. And this action will only happen if you have the right mindset. Because if you say, I can't do it, I'm stuck, I'm drowning in debt, somebody like me can never achieve more financial freedom, oh, this is for other people, I will never be able to have it, you will never be able to achieve that success, and it's never going to be possible for you. So it starts with that mindset, and I want you to remember that and continue developing and working on your mindset if this is something that you struggle with. The second thing that you need to work on is your income. Because the thing about investing your money, we all know now, well, at least I hope we know, is that the secret to becoming wealthy is by investing your money. Now, what a lot of people get confused, especially on the internet, because you have all these people selling programs on how you can get rich by investing your money into stocks, or get rich by investing your money into real estate. Investing is a way for you to grow the money that you have. It's not a way for you to earn more money. If you're trying to earn money, that's not investing. Now you're creating a job. If you're going out and flipping real estate, if you're going out and trading stocks, that's not investing. Investing is when you're taking the money that you have generated and you're putting this money to work and you're trying to get a return on that money. Now, historically, what's considered a good return is somewhere in the range of 7 to 10% a year. So when you hear people talking about 60% yearly returns or 200% yearly returns with this crazy investment, that is not investing your money. So if you want to be able to get more returns on a nominal basis, more dollars in a return, you need more money to invest, period. And this is where it's important for you to also invest in your income. Now, this could be through your job. It could be through a career change. It could be through a second job. It could be through building a side business. It could be through starting your own business. There's an unlimited number of ways for you to invest in your income, but you have to start working on increasing your income. And the reason why you want to increase your income isn't so you go out and buy nicer stuff, go buy nicer clothes, go buy a Rolex, go buy some fancy things. It's so you can have more money to invest. Period. The quickest way to increase your wealth is next time you get a pay raise, do not increase your lifestyle. Take that pay raise and now put it into your investments. Period. If you can do that for a little while, you're going to be able to accelerate your path to wealth. That's why I call it a decade of sacrifice, because through this decade, you have to work to spend less and earn more so you can invest like crazy. And if you are willing to do that, you're going to set yourself up for a financial future that most people only dream of. But it takes a lot of hard work and it takes sacrifice. And that means now you're working to earn money and have more assets. And when you're buying these assets, well, you can't see the results of these assets because you're just buying more of these things that are hopefully going to be making you money, but it takes time. That's why I call it a decade of sacrifice. It takes time for your money to compound. It takes time for your money to grow, and it takes time to see those seeds of the fruits that you're working to plant. And this is where now you got to understand, first you want to build the mindset, then you want to build the income, and then once you have the income, this is where you want to start buying the assets. You will never be able to save your way to wealth, and the reason why is because we have this thing called inflation. Inflation is devaluing your savings, period. And this is where now it's important for you to be investing your money. Now, there's a lot of different ways that you can invest your money. One thing that I like to do, and I can't tell you what to do, I'm not a financial advisor, I just tell you what I do. I like investing for cash flow. Because when I invest for cash flow, I can get paid with this income without having to sell my investments. Now, where can you generate this cash flow? Well, a couple places where you can generate this type of cash flow is dividend paying stocks and then real estate. Two places where you can start generating cash flow. And so what I like to do here is I take money that I generate, and then I take my money and I put it into these two things. Now, these two things will start paying me with a little bit of income. Now, when I take this income and I put it back here, I can keep generating more income. Now, the question is, how is this going to protect you against inflation? Well, if you think about real estate, what happens when you see inflation? Rental prices grow up. Now, in addition, you have expenses that rise as well. You see your property taxes rise, you see your insurance costs rise, you see your maintenance costs rise. But the goal is if all of your expenses rise by 10% and you increase your rent by 10%, well, now you're ending up in a net positive. I'll show you. Let's assume that you can rent a unit for, I don't know, $1,000 a month, and your expenses are $500 a month. Now, if your expenses rise by 10%, that means your expenses go to $550 a month. And if you can increase your rent by 10%, that means your rent now goes to $1,100 a month. That means now your net income isn't $500 like it was here. Your net income here is now $550. So when you have inflation, that can benefit you as an asset owner when it comes to things like cash flow. Same with dividends. What you'll see is that if you're investing in good dividend paying companies, and I have videos on my channel that I'll also link for you down in the description, where I go over how do you find dividend paying assets? How do you invest your money and limit some of your risk? But if you're investing your money into things like dividend paying stocks, the goal is to invest your money into a company that is strong. Now, the nice thing here, if you're investing into a strong company, is when inflation happens, this company is going to be selling their products for more money. Now, again, that's not good for a consumer, but from an investor, that's exactly what you want. Because now when they sell their products for more money, that means now they should have on a dollar basis more profit. If they have on a dollar basis more profit, they have the ability to distribute bigger dividends. So again, you can benefit when you see this type of inflation because now your cash flow starts to rise as well. But again, the difficult part here is starting, because going out and investing in real estate is expensive. It takes a lot of cash. It's difficult. There's a big learning curve. I mean, it's hard. I went through it. I know. And when you invest in dividend paying stocks, it takes a long time and a lot of money before you see any sort of significant cash flow. I mean, making the first $100 in dividends takes a lot of money. But the key is you have to get started if you want to see any sort of financial wealth in the future. And you also have to be consistent. Whether you're starting with $100, $1,000, or $100,000, you have to stay consistent. So now, if you're starting with $100, you got to start investing the $100, put another $100 next week, another $100 the week after that, $100 the week after that. And you have to stay consistent with your investments if you want to see any sort of wealth, because the reality is, if you want to be able to fund a financially free retirement in the future, you are going to need more money. Now, could you do off with $1 million? Sure, but my goal for you isn't to just live smaller and smaller and smaller to be able to make this nest egg work. I want you to be able to earn more. That way you can have enough money to live the lifestyle that you want. And in order to do that, you're going to need the income, which comes with the right mindset, that are funding the right assets that are hopefully paying you with cash flow. So now, if you want to do that, that means now you need to go out and accumulate more assets. That means you need to work to spend less and earn more so you can buy more of these cash flow producing assets, because you have to be more aggressive as an investor, put more money aside towards investments. Now, do you have to invest for cash flow? No, I like cash flow. Maybe that's not going to be for you. That's just something that I like. But if this is something that you want to do, if you want to have more financial freedom in the future, you will need more money, period. We don't know what inflation is going to look like in 2 years, but what I can tell you is inflation is still going to be around. And it's still going to be around in 10 years, and it's still going to be around in 20 years, and it's still going to be around in 30 years. So now, instead of trying to pretend like we're in this fairy tale world that money is not going to ever change, let's get real with the times. That way you can start making smarter financial decisions today. That way you can protect yourself financially. We talk about building a business that's scalable. I've talked about that many times, where you want to build something that can grow, that doesn't necessarily need you. That's the definition of scalability, that it can grow and it doesn't necessarily need you to grow. But if you want that business to be able to grow and not need you to grow, you have to do things that can't grow. The